Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock, with news of unsettling times in the bond and oil markets. We are now just days away from the first Fed rate hike in almost a decade, and bond markets are nervous. It is an especially nervous time for sub-investment grade bonds, that's junk bonds, and yields are jumping in the sector. That is the same as saying the price of junk bonds are falling. In some markets, there are just no buyers, even at big discounts. This is important because when liquidity vanishes in these markets, bad things can happen. The situation is critical for many mutual or hedge funds, especially those who plan to profit at the more risky end. The tide is going against them aggressively. In fact, one large US fund is essentially insolvent, and that is raising talk of a run on such funds. The reason the analysts are nervous is that bond panic could spiral quickly. So far, though, the investment grade end of the market is calm and stable. Among those most at risk include New Zealand's most indebted man, Graham Hart, and his Reynolds Group, which is loaded to the eyeballs with junk grade debt. And it's not only Hart that will be at risk. Bonds make up a significant part of KiwiSaver fund investments, although the sub-investment grade components will be small. In China, their government has reported an 11% rise in fiscal revenues in November. Consumption taxes led the way. The pace of Chinese fiscal spending grew even faster. And here's one for the China irony file. A top Chinese planner has said his country needs 10 new megacities, each with top schools, hospitals and corporate headquarters. That's to ease the strain on Beijing. More megacities are needed because they can't handle the growth and pollution in one super megacity. The US benchmark oil price is down today, although just now apparently holding at this level. Now at $36 a barrel, while the Brent benchmark is at $38 a barrel. These prices are at an 11-year low, and there is talk of the smell of fear in oil markets. The gold price has slipped too, now at $1,070 an ounce. The New Zealand dollar is stronger against most others today at 67.8 US cents, 93.4 Aussie cents and 61.5 euro cents. The TWI is at 72.7. The Chinese yuan has continued its slow and steady depreciation against the US dollar and is back to levels we last saw in 2011. This is a shift the Americans are not going to be very happy about, but the moves to float the yuan more freely is not something they can really complain about. And if the Fed raises rates, China will have difficulty stimulating its own economy. I'm David Chaston. That is 90 at 9, brought to you by interest.co.nz.